Good evening. My name is Faisal Khatib, and I'm an attorney, and I'm with Better Informed Housing Corporation. This is a live broadcast, and you can call us for any questions you may have to talk about our issues or any other issues that you have regarding housing. Our phone number tonight is 312-738-1060. You can also reach us on the web at betterinformed.org, where we help build the future, save the community, and help the neighbors. And you can reach us at 312-533-2688, or you can email us at neighbors@betterinformed.org. So I'm here today with Mr. Michael Yip. He is a recently licensed attorney, but he has worked extensively in housing issues, and he's here to talk today about HAMP. So, the first question, Mike, thank you for joining us this evening.
Thank you.
What is HAMP?
So HAMP was a program implemented by the government. HAMP is also known as the Home Affordable Modification Program. It's introduced around 2009, and it provided a standardized approach for how the banking industry was supposed to help those in deficient mortgages and potential foreclosures get loss mitigation or get help with their loans.
So this was in response to the mortgage foreclosure crisis that hit in 2008. That just took everybody out. And so, for my understanding, for people who have or are behind on their mortgage or going into foreclosure or unable to meet their mortgage payments, this HAMP program was set up by the Obama administration in order to help people. And are they giving money to these people, or is it what kind of is it a program, a guideline type of program for lenders?
Giving money is probably the right terminology. I'd like to use incentives. Incentives is probably a better term.
Is it giving money to borrowers?
That's right. It was introduced in '09 for borrowers to help provide a streamlined approach to loss mitigation or refinancing for borrowers to make it affordable so they could keep their homes for an extended period of time. Ultimately, it was extended through till 2013, but it recently ended as of December 2016.
So the HAMP program was essentially guidelines and rules for servicers and lenders as to how to provide loss mitigation support and assistance to borrowers, right?
That's absolutely correct,
Yeah.
Faisal.
So it wasn't actually the government giving money to people.
No, that's right.
No. It was actually providing financial incentives to lenders to comply with the program. Is that correct?
That's absolutely correct, Faisal.
So the lenders would get extra money for every HAMP program or every loss mitigation. So by loss mitigation, we're talking about loan mods, right? So modifying, for example, my mortgage. I'm in default and I'm behind 12 payments, taking my payments and rolling them into the total balance or reducing my principal. All those were things that provided under HAMP. Every time a lender or a servicer would give me that accommodation, that loan mod, they would get some sort of financial incentive from the government, right?
That's correct. And
Okay.
the program itself had a list of guidelines or basically requirements that a borrower had to meet or a homeowner had to meet in order to qualify. This way, we wouldn't be taking on such high delinquent foreclosures or mortgages.
Okay.
And then ultimately, if they met it, then they would get that financial incentive.
Gotcha. And so in addition to loan modifications, they would get, like short sales would be a possible type of loss mitigation that would be out there as well, right? So when the borrower owes, $500,000 on their house, but the house is only worth $300,000, if they're going to sell it, the bank would allow them to sell it for that lower price, and the difference between what they owe and what they sold it for, the bank would just forgive, correct?
That's right. Refinancing wasn't the only option, like you just said. Short sales or other ways to clear themselves out of that debt were part of that loan modification assistance.
So, if I'm understanding, HAMP expired.
That's right. Just last year, actually.
So as of, was it December of 2016?
That's right. December 2016.
So December 31st, 2016, HAMP was no longer available for borrowers to protect themselves
That's right.
or to have assistance in terms of their financial troubles. So Congress did not renew the HAMP program. Is that what it was?
That's correct. So it was only initially to go until the end of 2013, but it had a lot of success actually keeping people in their own homes. So
Okay.
it's subsequently extended through 2016 of December, and then it has recently expired as of last year.
Gotcha. So since then, what's been happening? Do people have any relief? Are they having any assistance, or what's going on?
So as of right now, there are no true solutions or a successor program to HAMP. There are a lot of ideas out there.
Okay.
There are many, and we'll discuss those further, many reports on the impacts of HAMP, positive and negative.
Okay.
So whatever you want to talk about first. Faisal.
Yeah, absolutely. So there's been nothing available for homeowners who are in financial trouble that pushes lenders to help support them. And I know we've had other programs and other shows where we've talked about loan modifications and short sales and the difficulties that exist with lenders really not caring and not helping borrowers who are in financial trouble. And in a lot of cases, people indicate, well, if you couldn't pay your mortgage, then clearly there's something deficient about you. Well, that's absolutely not true. Just a few things. Falling behind on your mortgage basically is more common than you think. A lot of people are living paycheck to paycheck in this country, and a lot of people are really only a few steps away or a few mishaps away from actually going to default. For example, having to replace your transmission on your vehicle and your furnace going out at the exact same time. Those could be anywhere between $1,000 to $2,000 each incident. And if those happen at the exact same time, you can't fix your furnace, you're going to freeze and you're not going to have any hot water. Or your hot water tank goes out. You can't fix your car, you can't fix the transmission, you're not going to work. You're not getting work, you're not getting paid. So what happens is, because people are living so close, and correct me if I'm wrong, Mike, they're living really paycheck to paycheck, they're running into situations where these one or two life events throws them off. Where now they have to decide between future survival or paying their mortgage payment today. And then it becomes a
vicious
snowball
cycle,
effect, a vicious cycle.
A vicious cycle.
So no more HAMP, no more protection, no ability for a borrower to get the lender to work with them is where we're at right now.
That's correct. So let's start with the impacts of what HAMP is. It's only been a
Okay.
calendar year, really, so it's hard to give empirical information or data to say what's the true impact of where we are from being 1 year removed.
Okay.
One of the bigger credit agencies, Fitch Ratings,
Yes.
did a study earlier this calendar year and discussed what they think the impacts are going to be going on now and in the future.
Okay.
So without HAMP, there is no more any eligibility criterion that we discussed earlier. You don't need to meet, a borrower doesn't need to meet requirements in order for them to qualify under HAMP. So
Okay. So before they had to meet eligibility requirements.
that's right.
So what were those eligibility requirements they had to?
A laundry list. Sorry, Faisal.
Do you want to put it up on the screen?
We can actually, if you'd like.
Sure.
So the top there. So these requirements here are enumerated, about 10 of them. These are basically how the the lenders were to determine if a borrower and their property were eligible for HAMP.
So essentially it talks about the unpaid balance of the loan for 1 unit, 2 unit, 3 unit building, kind of where it has to be at, when the loan was originated, whether it's a primary residence, if the property is secured that is not a primary, if the mortgage was secured by property that is not your primary residence and we're in default of the loan.
That's so in the case of vacation homes or cottages.
Gotcha. So those would not qualify, or they were qualified?
That would qualify. So if you had a cottage, for example, and it was supported.
So is this and or ors?
They are ands.
Ands. So the individual could demonstrate any financial hardship, anyone in the last 10 years they have not been convicted of felony, larceny, theft, fraud, or forgery, money laundering, or any form of tax evasion related to the mortgage or the real estate transaction. So long as essentially you have a financial hardship on your primary residence and the property is in good shape, you have the ability to actually get a HAMP. But
That's right.
HAMP doesn't exist anymore.
That's right.
So now you're saying that these requirements no longer are limiting people from getting the help that they need.
Right, and Fitch said in their report that they're moving now to more proprietary or in-house loan modification programs. And without these eligibility requirements, it provides lenders with a faster timeline on what to do, proceed with the mortgage, either let's liquidate.
So
or-
technically, because there's no limitation, it would mean that they have more flexibility to provide assistance.
Well said, well said.
But what is really happening?
What is really happening? I wish I could answer that right now, Faisal, but these are all based on projections that Fitch
I see.
had.
So what was the downside of HAMP?
The downside of HAMP was that, and I'll get to this a little bit later when we talk about the future programs that have been proposed. One of the biggest issues with HAMP was that following up with borrowers. A lot of incomplete information. I believe the number was 30% of people that applied for HAMP were turned down because they were because of incomplete documentation. That's a point that was really hard to make. Having these borrowers bring forth all the documentation forward so they can actually get approved. And other successor programs that we'll talk about later discuss ways to streamline that process to avoid that, let's call it bottleneck. for
Okay.
HAMP.
So bottleneck of paperwork.
That's right.
So essentially what's happening, so the claim is, sorry, I'm a little skeptical. So the claim is that lenders were slow to respond or had denied people's programs because HAMP was too restrictive in the level of documentation that it required just to be eligible.
I think that's one factor, Faisal. Also, both sides. The lenders didn't follow up, the borrowers didn't follow up, and you just say you're a borrower in default. You go to the bank and then you don't hear from them, or you don't provide something by accident.
Gotcha.
You're stuck, and
Okay.
there's no reason for either side to move because it's a kind of a waiting period, right? So you're like, where am I? Do I get this or not? I'm still in default ultimately, so. There's no
So these
movement.
new programs that you're looking at, so right now, and I can tell from some of the experience that we've had in the work that we've been doing outside of betterinformed.org, but essentially what we've seen is when we've negotiated short sales or loan mods, specifically on the short sales, before we would get short sales with no deficiencies. So the entire deficiency would get waived. And recently, over the last 8 months, we're seeing lenders actually refusing to waive the deficiency and actually have come out and openly stated that they're going to keep the deficiency because they want to go after the borrower in the future for whatever is remaining. And they want to have that option, which to me is ludicrous and double dipping. I mean, we've had other programs we've talked about where lenders have default insurance, where in the event that a borrower defaults, this default insurance kicks in, or in some cases also called, another form of that is PMI, private mortgage insurance, which reimburses the lender in full for any loss. So the fact that they're asking for additional recovery is double dipping.
Yeah, it seems like double dipping.
But anyways, so you're going to tell us about some of the other programs that are coming down the pipeline, or at least are in discussion, that might be helpful for borrowers.
Right. So I'm going to start from the statutory, the legislation portion. So
Okay.
in 2014, just after the first round of HAMP expired, the Consumer or Financial Protection Bureau, they issued a mortgaging servicing rule, which basically expanded some of the regulations they have, Regulation X and Regulation Z to be specific, and they codified some of the things that we got seen in HAMP. So it should be noted, though, that these regulation amendments or servicing guidelines are not necessarily enforceable, in a sense where that they don't require lenders to provide loss mitigation options beyond what investors will require.
Okay. So really so essentially HAMP was more of a set of guidelines with an incentive program as opposed to guidelines or rules and laws that have enforcement provisions to force the lender to do X, Y, and Z.
Right, and so these things by the CFPB are actually more guidelines in general.
So the new stuff is kind of following the same line of guidelines for lenders to move forward.
Right.
Okay.
So some of the key things that we saw in HAMP that actually were ultimately codified were dual tracking. So basically, a lender cannot begin foreclosure proceedings if the borrower is seeking a loan modification, which makes sense, right? We want to give the borrower
Right.
an opportunity to continue to pay off their mortgage until
Right.
they can keep the home, so they can keep their homes.
I want to make sure that the lender is not ignoring the loan modification process and trying to steamroll the borrower, which happened a lot and happens a lot.
Um,
So that's proposed for the coming. That they want to keep that going forward, is what it
Yeah,
is.
and that's currently in the regulations as of right now.
And the new regulations,
That's right. In
the new
26,
proposed regulations.
no, these are actually been codified as of 2014.
Oh, so these are guidelines for them to use, but there's no enforcement provision on this,
That's correct.
and there's no incentive provision.
That's right.
So this is kind of like good practices.
Right. Best practices.
Best practices.
Best practices.
So no teeth. Okay.
In 2016, though, the CFPB further clarified certain these servicing rules, and they added some other big HAMP procedures that, like we said before, are just guidelines, but they do truly reflect the goals that HAMP had. So one of the important ones is a mandatory 5 business day period to provide written notice to the borrower once a completed loss mitigation application had been received. Secondly, and preventing the mortgage servicer or lender from proceeding with a foreclosure sale if the servicer receives a complete loss mitigation application more than 37 days before foreclosure sale. So giving borrowers a little more latitude if they can try to salvage their property.
Gotcha. Okay. So giving them more time to do X, Y, and Z, but not actually. Again, it's almost like it's a mandatory thing, but it's not.
Right.
It's a mandatory 5-day period to provide written notice to the borrower once a completed loss mitigation application is received. So they have to provide the 5. So what if they don't do that?
Right, and so they further codified that a servicer may only move for sale when the loss mitigation application has been denied, withdrawn, or the borrower fails to perform on a pre-existing loan modification agreement. So all these things were helping develop a better relationship between the borrower and lender, and would only allow foreclosure once one side or the other side failed, which is good. You're trying to promote home ownership and keeping
Cooperation.
That's right.
So if there's and if they had a loan modification before and they couldn't live up to it, they don't qualify for this protection.
That's correct.
But if there's a sale pending, can this be used to prevent the sale from going forward?
That's right. It's kind of a stay on the sale.
So this is enforceable then?
It's enforceable, but not, because it's like ultimately still a guideline. Because if the investor of the lender doesn't codify these in their contract or whatever they have agreement with the bank,
Right.
they don't need to do that, the entities. So they don't have to go over and above. These are over and above, if you will.
Okay. So, but the baseline is the investor guidelines. If the investor has none of this in their guidelines,
Typically not.
then we have none of this. So we have to worry about it. Then we have no protection.
That's right. That's right.
So really, borrower's still totally exposed.
More or less, yes. Unfortunately.
Okay.
Unfortunately.
So, there we go. Next.
One final thing I want to talk about with within the CFPB's clarification in 2016 is that they required that written notice to borrowers if the bank or the lender could not obtain third-party documents within 30 days of receiving a borrower's completed application. So this is addressing what we discussed earlier, Faisal, that a lot of people that applied for HAMP or applied for loan modifications didn't have complete documentation. This gave them another window of opportunity to bring forward these documents and try to promote that relationship between the lender and the borrower.
Again, a recommendation.
Another recommendation.
Okay.
So what did you like to,
Well, so going forward, so I mean, there's a lot of these. These are proposed by the Consumer Financial Protection Bureau.
That's right.
And are they being seriously considered in Congress? Do you know where that sits? Do we know what the opportunities are? Do we know, what can a borrower do right now that's in trouble, and there's no HAMP protection? Are they completely exposed?
I wouldn't say they're completely exposed. You could always inquire on what loss mitigation options they have. A borrower should always do that in order to try to keep their home. And discussing that, you should discuss that there's these regulations out here. While that's not necessarily enforceable, they do provide some sort of idea or something to strive towards for better relationships and keeping homes.
Okay, so can the CFPB guidelines be used in any way by an attorney to stop a sale, or to kind of impose and say, hey, look, these are guidelines that you should comply with, or is there really nothing? I mean, what is available to a borrower to kind of make it work?
I think an attorney can help by comparing, what the agreement between the investor and the lender is, and then comparing that to what we discussed earlier in the CFPB regulations.
How would they get access to that? Is that would have to be through the court process then?
Likely, yeah, it's probably not public record, but that would probably be the best way, I think.
So through discovery
Yeah.
in the underlying foreclosure case, or maybe reaching out and sending a letter asking for that information?
Yeah, perhaps. I'm not really sure what's the best avenue, but I'm sure an attorney can best answer those questions.
So I'm going to go really quick. Remind you guys, this is a live feed. We've got about 5 minutes left of the show, but if you wanted to call us afterwards, you can call us anytime at 312, and I'll show that to you here. 312-533-2688, and you can reach us at neighbors@betterinformed.org. Our offices are located at 218 North Jefferson, Chicago, Illinois, 60661, Suite 103. And we are our mission is to provide education and information to communities about real estate, to educate and provide information. And I'm here today with Michael Yip. My name is Faisal Al-Khatib. You can call us tonight if you want at 312-738-1060. So, Mike, what else should we know about, if you want to talk more about HAMP, or do you want to kind of, what options are available, or what we could possibly do to help homeowners?
I think the best things would be to briefly talk about like the takeaways from HAMP. So, a lot of government agencies after HAMP ended within this calendar year, just made a report on what they liked and what they didn't like.
Oh, fantastic.
And how they can definitely improve.
Do you have some of those statistics?
I do have some right now, but I'll definitely discuss those in detail with you. So I think there's like 5 guidelines that one government agency, I don't have that on the top of my head, they discussed how to better the HAMP process going forward. So what if Congress or somebody brings a bill similar to HAMP forward, they should definitely focus on 4 or 5 key factors. So that being accessibility. So borrowers should be accessible to their banks in order to get information. Affordability. The loan mod should be affordable. You're trying to promote home ownership at the end of the day, and you want to make sure those payments are at a certain level where people can keep them.
Okay.
Third, sustainability. The program should be able to continue until basically the loan is paid off. Finally, in transparency, there should be open dialogue between the lender and borrower on what documents are required, what's the expectations, and what are the true key details of the mortgage and obviously the loan modification program.
So would you say that for borrowers who are in financial trouble right now, what they should be looking for is probably find an attorney or find an organization that can help them, preferably an attorney, because you want to make sure that they are represented in court, they don't lose out on that, who can at least negotiate in their behalf for a short sale or some other loss mitigation option, whether it's a loan mod or even, again, like as a short sale. But they're going to need that legal sophistication and protection. Is that correct?
Absolutely correct, Faisal.
And so, if they would need, what we've seen and what I've seen is that counterclaims. So, if you can find mistakes or errors that the banks have made in their process and violations of the Fair Debt Collection Practices Act, if they qualify, and if they actually come into that, or any of the Fair Credit Reporting Act requirements, or any other of the TILA and RESPA types of violations, that might be an opportunity to bring that as a counterclaim if it's early enough in the case. That's one way of actually finding a resolution, getting them to dismiss, or to give up the deficiency or provide loss mitigation options and opportunities.
Right.
So essentially, other than that, we're going to have to wait and see what the Congress is going to do about passing something new. So thank you all this evening. My name is Mahmoud Faisal Khatib. I'm an attorney. I'm with Better Informed Housing. I have with me Mr. Michael Yip, a recent attorney, just got sworn in. We're very proud of him, talking about HAMP and loss mitigation. We are the betterinformed.org, Better Informed Housing Corporation. You can reach us at betterinformed.org, and you can email us at neighbors@betterinformed.org. Our mission is here to help those and provide real estate education and information. We're wishing you a good night. See you next month.
Thank you.